Your headline, it's good to have you on the show, is that the Fed pivot is postponed. I could make the argument very easily that it was never scheduled.
Well, I guess, the bulls have been wanting it to pivot, and the market's going up, sort of anticipating that. And I think the bulls got everything they want the last couple months, and now they got a very quick sort of, oh, no, it's not going to happen. But I think, today's action is, this is what happens when markets move very quickly and the Fed is involved. I've seen rates go up and down. I don't think it really matters that much. Rates aren't really that high yet. I don't think they're going to get high enough to really make that big of a difference and, really take the economy down. I think the issue is supply chain. We had the financial crisis in 2008. That was a financial crisis. They were illiquid, and the Fed had to come in. Now it's not. Inflation is really different, but it's the supply chain, and that's got to be fixed by all of these big companies. Have got to fix it, and that's going to take a while, and that's creating the inflation, and the Fed is acting to try to sort of balance it out. But I think it's an opportunity here. I think if they move rates higher, the market may go down more. It may test the new lows, but that's an opportunity long term for everybody, because I think this is not going to go on forever. Capitalism is too strong. It's too embedded in the system. There isn't any COLAs. You're just not going to get a long-term spat of inflation like you had back in the Volcker days. It's just the economy is just too capitalistic now.
I know, but what if the Fed breaks it in the process of doing what it's doing? Isn't that more likely than not?
Well, I think the question for the market is whether the Fed's action will close Wall Street. And when I mean close Wall Street, meaning not being able to raise money, not being able to do IPOs. We know now this year has been very bad for IPOs. There's been a lot of delay there. It's been not that bad for raising debt. So Wall Street is still kind of open. The banks are very liquid. They're lending. They want to lend. As rates go higher, they're going to want to lend even more. Yes, there's credit issues, but there's plenty of good lenders out there. So Wall Street is open. Companies can finance themselves. I think the companies that are in trouble, where there's risk for owning them, are the ones that are losing money and need capital, because they're going to have to dilute shareholders big time to get that additional capital. So stay away from the money losers, because they're going to have trouble, because Wall Street is starting to sort of not want them to be, in the game of raising capital now.
You mentioned maybe the idea of going back and testing the lows, and that would be a buying opportunity. Now it's easy to say until we actually start going, back down to those levels and everybody feels like garbage. But is that your base case at this point? Do you think we're going to go back and do that, or did we come too far, even with how bad we feel today with a 1,000-point drop?
Well, let's not take one day and turn it into a bear market, and let's not take one day and turn it into a bull market. So let's see what happens next week. Let's see how the Fed said their piece. They're not going to talk again. Hopefully they'll just shut up and go on vacation next week and go off and do something around Jackson Hole and not be seen again for another week or so. And let's let the market deal with the fact that, rates are going to be a little higher, and maybe financial conditions are going to be a little tighter. And the QT is going to start next month, and let's see what happens. And the market may say, look, the things are, I think, as difficult now from an emotional and verbiage point of view than they've been in a long time, because you got the Fed saying, oh no, we're going to raise rates. It's going to be tough for a long time. A lot of the words he used today were pretty tough. I mean, here's the Fed chairman writing a speech, and it went on for, I think, 8 minutes or something. And he used some pretty difficult words in terms of it's going to be difficult. We're going to have some hard times. So he didn't just say that off the cuff. And so the market's dealing with that now. And so, that's, again, that turns into the buying opportunity. Maybe it's not today, maybe it's next week, maybe it's next month. But I think that's, we're getting to the point now where we have maximum pain emotionally, and the Fed is exerting it. So, we'll see what happens.